Hello and welcome to Car Dealer Live. I'm James Batchelor, and today we're going to take a look at the used car market as we head into the remaining 2 months of the year. Crikey, how time flies! And of course, we're going to be discussing all of those challenges that are facing car dealers right across the country. So, joining me to chat more about all of this is Auto Trader's Chief Operating Officer, Catherine Faiers. Hello, Catherine.
Hi, James. Thanks for having me back again.
No, it's always lovely to have you on, Catherine. Really good. I mean, last month we had Nathan, and it's nice to, that was last month. Now it's it's your moment now. Was actually picking up on that. When we last spoke to Auto Trader, it was with Nathan. It was with the other James last month. He was talking a bit about how the nuances that are going on in the used car market at the moment, and sort of the changing dynamics that you're seeing and you're tracking. I know things move quickly in this business over the course of a month. I mean, are you still seeing that? There's still lots of pieces at play at the moment.
Yeah, absolutely. So the market is undoubtedly a bit complicated. We're
Yeah.
seeing bigger differences by segment than we have for some time, which definitely makes it harder for us, for retailers, for manufacturers, for everyone, I think, to navigate the market. I think, as always, our advice would be to follow the data, and don't follow the headlines. The retail market is definitely nuanced, different segments being driven by different trends and different market dynamics that are playing out. We'd always encourage retailers to focus on the retail market, focus on what's happening with consumers, and work back from there. Be led by those trends. And overall, consumer demand is robust. Engagement still tracking up year on year. We have seen a slightly bigger step down from September into October than we saw this time last year, but that September-October step down is actually much more consistent with the typical seasonal trend we would have seen in a kind of more normal market. Our proxy sold data also suggests that demand that we're seeing at the top of the funnel on Auto Traders translating through into used car sales. Our measures of that sales data are all trending positively ahead of prior year, and we think Q3 overall will come out to be a strong quarter for retailers. Similar story with speed of sale, how long it takes to sell a car, how long that vehicle takes to leave a retailer's forecourt. The rate that we're seeing again is ahead of prior year and ahead of what we would have typically expected to see before the pandemic. That said, we are seeing some bigger differences in performance between different retailer segments. So we're seeing typically independent, smaller retailers often trending a bit more strongly, and some of the bigger franchise groups potentially in terms of that transaction volume a bit softer than the independent segment. So there are absolutely still good pockets of demand out there, still profit opportunities available, but some of those supply shocks we saw during COVID and the pressure we're seeing on manufacturers to drive those EV volumes is having an impact and is creating those very big differences in some of the market segments.
That's interesting. I mean, what's the impact on prices? Because here at Car Dealer, we've been reporting on falling trade values for quite some time, for the last few months at least. But whereas with retail values, you've been reporting, in another consecutive month of price increases. I mean, what's the situation going into the final part of the year? I mean, retail prices still high, or are they starting to sort of plateau or even fall?
I think pricing is definitely the biggest challenge that we're all navigating, and those pricing movements in particular for younger age cohorts of vehicles, because of those supply dynamics, have been playing out differently. When it comes to what we're seeing in retail prices, we've definitely seen some softening over the last few months, but we haven't seen the level of step down on retail pricing that has been reported on those trade values. September was the first month actually when we did see year-on-year declines in the retail price, small percentage movements, but it was a decline, which was the first time we've seen that for more than 40 odd months. October, we're seeing the same, with a very slight step up in that rate of decline. Now, some of it at this time of year, we would expect to see some seasonal softening, but I do think this is a bit more than that. It does reflect, I think, nervousness we're seeing on the part of some retailers, I think driven by some of that trade, those trade assumptions and trade projections, and concern over the level of supply growth that we're seeing coming into the new car market, more of a return to volume, short cycle business, discounting in new cars, and then coupled that with some worries over how and where consumer demand might trend. And I think we're just getting and seeing more nervousness than we might have seen.
Yeah.
It is worth saying that those pricing movements are being driven by specific groups and specific age profiles of stock. So consumer demand overall is robust, but transaction volume, speed of sale are varying by cohort. So if you look at cars under 5 years old, for example, we've got cars 1 to 3 years old where the average price, retail price is down about 7%. Mm-hmm. Big movement, one of the biggest movements we've seen for a while. And there's no doubt that return we're seeing to supply growth in those younger age cohorts of stock is flowing through. But we're also then seeing for those older cars over 10 years old, we're seeing pricing up about 7%. So huge differences between those different segments and cohorts of vehicles, which is driving then some of what we're seeing in terms of retailer performance, retailer confidence, retailer appetite in the current market.
Yeah. And I mean, I think it just goes back to your earlier point, isn't it? That, that might be the headline figure, another 40 odd months of consecutive growth, but you've got to look at the data, haven't you? You've got to look at the different data sets for different kinds of cars. You did mention just a second ago how there is a bit of uncertainty. I mean, there's got to be, hasn't there? If dealers are knowing that perhaps retail prices are strong, trade values are falling, there's different pockets of demand. I mean, this can't be a particularly certain time for dealers as they go into the rest of the year, can it?
Yeah, I think there's a lot, isn't there? There's a lot of quite big structural trends playing out. The forces of change that we've been talking about all year are absolutely still at play. Big swings in those supply dynamics, return to production post-COVID, the shift to electric vehicles, regulations driving very different behavior by different manufacturers and brands, and then changing consumer behavior in the midst of all of that. And all of these trends are fueling complexity in the new and the used car market. I don't think we're necessarily seeing volatility as some others have talked to, but we're definitely seeing all of these quite long-term structural trends all play out in parallel at one time in the market and have very different impacts on those different market segments. And we've seen a period over the last 3 years or so where cars were appreciating in price. The seasonal trends that we used to see before the pandemic just weren't really there in the same way. And we saw these massive supply shortages. So how retailers used to think about sourcing, how they used to think about pricing, how they used to think about other key business strategies has all had to change. And that data we used to rely on, historic performance data, on stock availability, on pricing, it's no longer that helpful because we know looking forward that structurally the market's going to look quite different. We're not seeing a return to pre-pandemic trends in the data. We're seeing a very new and different market taking shape, and one that's going to take years to play out. Electrification means the whole car park's changing, and we've got very little historic data to guide us on that. We're seeing new brands come to market with new models at a rate that we've never seen before, and we have no history of valuation data on those brands or on those makes and models. And we've got a consumer segment who don't really know these brands, don't understand the different models, and that data on specification and deep data on each vehicle is only going to become more important. So sourcing strategies, pricing strategies need to respond again to this backdrop. And all of it points, I think, to having that vehicle-led view rather than a forecourt-led view. Strategies and optimizations need to happen at a vehicle level. I think it's really hard, arguably almost impossible, to set rules and policies across types and ages of stock, because of these trends all playing out at the same time. There are very specific and unique differences that we're seeing on a vehicle by vehicle basis.
I mean, what do you think the biggest challenge is for retailers at the moment? Is it simply, sort of forgetting about what's gone before, adapting to this new market, or is there other bigger challenges than that?
I think operationally, the big challenge we hear most consistently from retailers has to be around prep time and prep costs, like a combination of people costs, parts costs, logistics challenges. Capacity means that the time taken for retailers and the cost taken for retailers to get vehicles to market feels like it's higher than it has been for some time. Many retailers have also shifted stocking profile, and so we're sourcing potentially slightly older cars, which just inevitably need more prep to get them ready. We've also seen some retailers bring more in-house, look to own more of the capability. So there's a lot playing out in prep and operationally that retailers are absolutely needing to respond to as a core capability. I think the second challenge, as you talk to, is then how you best navigate all of these different industry trends and how you figure out like the key data sets, the key insights that you need to know to help you navigate these different challenges, and how you as a retailer put yourself in the best possible position to take advantage of the opportunities that inevitably will be there, and also avoid some of the risks that might play out if you get on the wrong side of some of these trends.
Yeah, I mean, if anybody thinks selling cars is an easy business, I think they're a little bit mistaken after everything that you've just been saying, and of course everything that we know at the moment. Finally, Catherine, I mean, how are you helping retailers adapt to the challenges in the market, and have you got any words of advice for dealers moving forwards?
So to help retailers navigate this quite unique market that we're seeing, we've just about to announce that we're launching a new product called Trended Valuations, and we're also making our enhanced retail check features available to all retailers from early next year. So this actually comes from a lot of the time we've spent with retailers over the last few months, where this has consistently come up as a product that they need and people feel will really help. We think that this new layer of intelligence is going to really help retailers to have more confidence to adapt and respond to some of those changes in the market, and help to make quicker, hopefully more profitable advertising, pricing, sourcing decisions. That Trended Valuations product, it combines to show what a vehicle has been worth over the last 6 months or so, and how that values then forecast change into the future. That future valuation, calculated based on a combination of all the historic valuation data points we have, looks at the current market performance of that vehicle, seasonality, takes into account the age derivative within the life cycle of the generation of that car, and it can be adjusted to cater for expected mileage usage over time. And we know, based on early feedback from retailers that have experienced the product and worked with the product, that it can really help with a number of key retailing jobs that they need to do to drive performance in their business. So all retailers will be getting access to that in the coming months, either end of this year through Auto Trader Connect partners, or early next year through Portal. Coupled with that, we're then also making our enhanced retail check features available in Portal, and also making them available through Auto Trader Connect partners as well. And we know that those local market insights, as we were talking about, at a vehicle level, where you are getting competitor analysis, you are getting the supply data, the demand data, condition data, days to sell data, you're getting all of that very rich market insight in one place at a vehicle level. We know that that can really help to drive confidence in decision making and better performance for retailers. That Auto Trader Connect strategy, we're now a moment where we've done integrated with over 200 of the technology partners out there in the industry. We've got over 9,000 retailers benefiting from those connections. So we're very much committed to making this data available through those partners in a way that works for retailers, that's easy to use, it's part of their core systems, part of the core processes, so that retailers have the tools they need to navigate the market.
Wow, it sounds very exciting, very promising. Well, we look forward to catching up a little bit more about the used car market next month, December. Can you believe it? But for today, thanks very much for joining us, Catherine.
Thanks, James.
Well, that's it for today's Car Dealer Live. Join us again very soon. Bye-bye.